Good morning, friends. This is Ayer again from E-mini Futures by Sell.com. We'll start with a disclaimer. We're not certified traders. By the way, this video is not about trading. It's more about investment. And but even then, to be on the safe side, we're giving you the risk disclosure and all that. So this is our website, E-mini Futures by Sell.com. Okay. Now, with that being said, in this video, we are only going to focus on investment. That is, the question is ETF, exchange traded fund. I'm making an assumption that the person watching the video know what an ETF is. If you do not understand what an ETF is, please do Google the topic and try to learn from it. Okay. Now, this video is meant for those people who have a job or who have a full-time business or part-time business and have no time to sit in front of the computer and no need to listen to all the preachers on the television and news media who will tell you to buy this ETF and that ETF and active management. We are actively managed ETF and all that, and they charge very expensive MERs, management expense ratios, and they are becoming rich at your expense, you the investor. Now with sophisticated computer software and internet and technology, you can construct your own ETF portfolio and you can build wealth and generate income from an investment point of view and from a retirement wealth point of view and all that. There is no need for you to waste your money and pay these so-called preachers and so-called experts who are with the banks and insurance companies, mutual funds, the whole financial services industry telling you, we will manage your money, give us the money, we'll do this, we'll do that, you can do it yourself. You don't need their help and pay them expensive fees in the bargain. Okay. So what you do is we have some very nice, the major ETFs which have high liquidity, those are the ones we have listed here, like KBE, it's relating to bank, then XLB, materials select sector, IYR is to do with real estate, SMH, semiconductor, okay, DGP, gold, the long gold, short gold, oil, QQQ, SPY, diamond, XLB, materials sector, IWM, Russell 2000. All the highly liquid ETFs have been covered, and our software will give you all the signal when to buy, when to sell. For example, if you look at SPY, okay, so it will tell you, okay, this price here on 21st of October is time to invest in SPY, and before that you make money by shorting SPY. Now this is very very important, by the way, because Wall Street, Bay Street, and other stock exchange brokers and advisors, wealth financial planners and investment advisor, what they will tell you is buy and hold philosophy. And one of the biggest problems or challenges with buy and hold is that makes an assumption that stock markets are always going up and trending up and there are no cycles. So that is a major flaw in the buy and hold philosophy. So you will see there are several times in the market has a down cycle and then an up cycle. Now, why should you listen to these preachers and become a slave of buy and hold philosophy? That is my question. Because why only they should make money? Why not you also make money when the market is coming down? You see, if you know what goes up has to come down and what goes down has to go up, and if a software can tell you how the cycles are forming, as our software is doing, and by the way, we give you free trial. So you can short here, you having a 9 to 5 job or you having your own business. You don't have to listen to those buy and hold preachers, let them preach and you don't want to make them rich. They are preaching because they don't want you to pull out the funds. They want to keep your money parked with them permanently so that they can get the MER, management expense ratio. Go on Google and do what an MER is. MER is what makes them rich. Okay. And the MER is coming out of your hard earned money, out of your hard earned salary savings, by the way. So my point is, you sell here either from an investment, and if you have limited capital, you can trade options. I mean, you don't have to trade whatever savings you have. You can either use options, or you put your, and the software is telling you, okay, you buy put options here and you make money. And then you buy either call option or go long with traditional way. Okay. So all this can be done, and like exactly this is the way. So you're able to make money both ways. Whereas if you do buy and hold, what happens is, suppose you bought here, you don't make money at all in this cycle. You only make money here. So you see, this is where they trap you. They will tell you, listen, buy and hold is a winning formula because you bought here and now the market is here. So you made money and therefore buy and hold wins, right? But there's a trap. What they are not showing you is that before the market went up, and I bought here at 199, S&P came down to 182, and then from 182 it went up to 208. So why shouldn't I participate in this move down? You cannot, because you know why? Because they made you a slave of the buy and hold philosophy. This is brainwashing. So Voltaire said long ago, man is born free, but everywhere he is in chains. So that is true even today. So that's what we are saying. There's no need that you have to buy into buy and hold philosophy. And by the way, we will also show you technique how you can avoid some of these small bad signals or losing signals. When you become a client, we'll teach you all the techniques. Okay, so this is QQQ and this is Dow Jones. So all you have to do is short diamond Dow Jones here by buying puts on diamond ETF. It's very simple to do that, and then you go long here. Okay, so this also tells you if you're a salaried person, when you should be invested in the stock market and when you should not be invested in the stock market. So if you get a signal like this and the market is coming down, there is no reason why you should be invested in the stock market. What you should do is get rid of all your stock portfolio, mutual fund, whatever exposure you have to the stock market, put them in bonds or some safe investment. And so that way you avoid all this loss. That's what happened during the financial crisis, remember? And then when you have a signal like say now rotate your money from your GIC or money market funds or whatever safe investment or under the mattress wherever you kept your cash, now go long. So this way you avoid this financial catastrophe. Okay, so millions of people all over the world became bankrupt and lost their retirement wealth during that financial crisis because they didn't have this software. If they had this software, they would have known it was time to get out in 2007 itself. And then they could have come in 2009 and done this. Okay, and then of course we have our other module whereby we will eliminate, there is a method by which you can eliminate these small losing signals, which we will teach once you become a client of us. But the key point we wanted to drive home is use this kind of, these days with computer software and technology and all, you can use software to tell you when to buy, when to sell, when to be in the market, when not to be in the market, when to be in bonds, when not to be in bonds, when to buy corporate bonds, when to buy high yield bonds, everything you can know, when to buy, invest in semiconductors, when to invest in real estate. See, you don't have to become rich in real estate. Let's say you are renting an apartment, okay, and you don't own a home, but you want to benefit from the boom in real estate that's happening, say, in United States. This is a way to do it. You go long on IYR, the ETA, and you participate in this real estate boom, which happened in United States or are still happening. Okay, so for example, if I now put it in the weekly chart, So you can see the housing is still the housing industry. This is where you get in. From February onwards, there has been a big boom, but there was a major correction in the real estate. So you can profit here and you can profit here. Okay, so you can profit in many ways. So I'm telling you, see all these cycles, these cycles, peaks and troughs, and they will tell you, in order to keep your money, they will tell you, don't do market timing. You cannot do market timing. It's not, you stay in the market. Your time in the market is more important than market timing. They'll come up with all these cliches. Let me warn you, these are cliches. Throw them in the Atlantic Ocean. Okay, they are all meant to. Those are from preachers who want to keep your money with them. That's why they are telling you all these things. Don't believe in it. With sophisticated computer software, you can do market timing in a very intelligent fashion. Okay, and you can construct your own investment portfolio for retirement. You can, even if you are like 20, 25 years old, just starting your career, you can make a lot of investment and wealth management and wealth building by investing wisely in ETFs using computer software like this. These are now available. These are not a fantasy, they are a reality. Okay, so you can manage your own wealth and not pay those expensive MERs to mutual funds. I rest my case, and God bless you.